Now let's bring in Glen Kacher, founder and chief investment officer of Light Street Capital. It's nice to see you.
Nice to see you too, Scott. We've been working for the weekend here, right?
Yeah, I hope not. 3,000 miles from New York. How's it feel out there?
Feels pretty good. I mean, but I think we're all struggling kind of with what's happening in the real economy, and with the tariffs and how that's going to impact the capital markets going forward.
I mean, how do you think this is all going to shake out? I mean, I just had some guests on who say tech is the place to be. It's your wheelhouse, obviously, and a lot of these stocks have gotten cut down pretty well.
Yeah, I mean, like as an investor, we're looking to invest in industries, sectors, companies that makes products that are, one, difficult to compete with or to replicate, and two, that companies that innovate faster than their competitors. And to us, that tends to scream technology. That's also the sector that we spend all our time in. But we feel pretty good about where we're standing. I'd say, similar to what Tom was saying a few minutes ago, the semiconductor space, I think, we've seen those stocks marked down. We look at the AI race and the companies that are buying those semiconductors to harness AI. And those companies that don't buy those semiconductors, that don't rent them, that don't build those applications to participate in AI are going to fall behind and lose out to either new players or their existing competitors. So we look at microprocessors that make all this possible, the brains of those servers that serve up these cloud AI services from NVIDIA, AMD, Broadcom, and say that's the place I want to be. Those are the hardest chips to make in the world, and we want to own those companies. We want to own Taiwan Semiconductor, which is the company that actually makes all of those chips physically in Taiwan, and we want to own that company. And as the quote you just put up said, it's impossible to avoid shipping those chips in from Taiwan. And so I think that those are, this is a sector that's going to get treated well by the Trump administration.
As an investment manager, how are you viewing all of this? I mean, I've seen, a post at least of yours on social media about the tariffs, obviously not being in favor of what the administration has done. But the bigger ramifications of how all of this is playing out and how it all went down, you're having to make your investment decisions based on the unknown.
Well, I'll clarify that. I mean, I think that President Trump and the administration, they're attempting to restore the economy by doing three things: fixing government fraud, waste, and abuse, right? I think we can all agree we've got major problems there. We're demanding that our allies take on more of their own defense spending. I think that's a fair request. And third, we want to reduce the unfairness in global trade. I think that's a rational goal. I mean, when I travel around the world and I talk to U.S. companies that are trying to access some of these foreign markets, it is unfair. There are unfair tariffs, there are unfair barriers, there's theft of IP. We've got to eliminate those things, reduce and eliminate those things. So I think the administration's efforts in trade come from a rational place. The problem is that it's the implementation that has been so off. We've taken a mercurial approach to solving this problem with tariff levels that are so damaging. Neither side, us or the other side, could live with them in order to, in theory, force speedy negotiations. But at the same time, you're upsetting the entire capital markets and causing interest rates to fly up. And this is a policy error. So we need an administration. We need a little bit more sage kind of behavior, the kind of talk that Ted Pick or Jamie Dimon have when they speak to market participants. And, we need that kind of negotiation and that kind of behavior as opposed to tough, bombastic talk in the Rose Garden.